Hi, and welcome to the Trading Pit, personal investing and trading tools for the active investor. Please note this is not investment advice. I am not a financial advisor, and past performance is not indicative of future results. It is the week ending April 18th, 2025. Do you ever get the feeling that the stock market is waiting for something? It could be something geopolitical, a comment by a president, or some kind of emergency Fed action. Something just to get this market to act. The ES chart I'm going to show you today is telling us the same thing. But first, let's do a weekly review. Here's the weekly performance of most commodities for the last week. Note that most of the commodities are up, especially all the metals, with copper leading the way at plus 9%. Sugar and natural gas are the only commodities to be down for the week. Also note that the Dow was down 1%. I believe this could lead to the entire stock market going down. The Dow is where the big international investors work, so that should lead the market. Now on to the charts. First, as I was talking about, here is the Dow Jones daily bar chart. This week we had a retest of Wednesday's monster up move. We had a retest of that high. And Tuesday actually made a slight new high. Then it closed below the open and below the prior day's close, therefore classifying it as not just an upthrust, but also a clear out, which is a very strong pattern. This is one of my favorite patterns, both daily and intraday. This was a clear sign to sell. The next day, gap down below the prior 2 days opens and closes, forming a pattern 1 island reversal. This is from my 9 patterns that signal a trend change, and boy did it signal a trend change. Thursday also had a 4 close reversal pattern down. Again, this is pattern number 5 out of our 9 patterns that signal a trend change. I've highlighted a possible short side target for the Dow around $38,000. This is the open of the low bar. Normally I would take profits at the high of the low bar, but the low bar was extremely wide and the high of that bar is extremely high, so the next point is the open or the close of the low bar. Next, let's look at a stock. This is Apple stock, and it confirms the island reversal that we saw in the Dow Jones index. Note the clear island topping pattern on the 14th. It also was unable to fill that breakaway gap from around 225 all the way down to 205 that happened in early April. Again, barring any emergency Fed rate cut, which the president is pushing for, I think Apple and the stock indices should test these recent lows. And again, for Apple, I am looking for a move to the open or the close of that low bar down around 172.5. Next, here's the ES chart. This chart is the 4-hour ES chart. This echoes my point earlier about the market being in a holding pattern. ES futures have formed a large pennant formation, which is a symmetrical triangle, with the price contracting to an eventual breakout. Maybe the Dow Jones is telling us this will break out to the downside. Taking the width of the pennant as the target, we get possible points at 5,800 above and 4,900 below. This is not advice, but maybe it is time to buy a straddle or a strangle in this market in the options. Next, let's go to the grains and look at corn. On April 7th, corn had a decisive breakout of a clear downtrend line. This is marked. This line is shown, it is touched 7 times, not touched, but it's gotten close to this trend line 7 times since late February. And then note the clear out on March 28th. This was also a spring. This was followed by a retest and a rally 4 days later. How it got down open but closed above, forming another clear out bar. 2 days after this was the breakout, and that was the end of this downward to sideways trend. Corn finished our pattern number 9 bullish pattern over the next few days, culminating in a dynamite triangle which is marked. A wave projection out of the upside of this dynamite triangle puts a target for corn at $5.25 a bushel. Finally, let's go to crude oil. Crude oil is formed this is a 4-hour bar chart. Crude oil is formed a head and shoulders bottom formation with price breaking out through the neckline this week around $62 a barrel. The wave target for crude oil is now $69, a 10% move up from here. So that's a good move in crude oil. It's a good move in any market, especially if that target is within, here it would be within a week. There was a dramatic down move from $72 a barrel in early April. This could provide overhead resistance, or it could be possible added buying strength as price moves against all the sellers that sold on the way down. They'll have to cover their shorts and propel this crude oil market higher. That's it for this week. Thanks for watching. Please like and subscribe and comment with anything you might want added to these videos.